Well, good morning, folks, and welcome to the daily report for Monday, the 11th of October. And let's just go through this in the normal fashion, and then I'll make some comments a bit later on. But let's have a look at the euro, and I'm going to view the weekly chart on the euro. It's pretty easy this week, really. There's no conflict about which direction we should be trading in. And there's the weekly chart for the euro. As normal, just ignore the indicators on the weekly chart. They have no relevance here. It's just because I switched across from the hourly chart for ease. And you can see there's last week's candle, clearly a higher high, higher low, right up against that black line, which is a resistance level, a long-term resistance level. So we've just touched that, just above 1.4, 1.4020. Interestingly, while we're on the longer-term charts, if I show you the daily chart on the euro, we've got a one up, one down scenario right here. So there's the one up, the spike high. Friday was a one down, and that's actually a reversal pattern, the one up, one down, which means we'll probably see a bit of a correction during the early part of this week, and that should take us down to some of the G7 levels from where we should be able to trade. We're not going to be trading counter trend because that's a decision I've made for a variety of reasons, which I've discussed in live sessions. So no counter trend trading. For the lab rats. If you're not a lab rat, you're quite welcome to do that. And of course, as you'll know, I've just sent out an alert actually to sell the euro at 39.70 based on this weekly reversal and also what we see on the hourly chart. But if you're a lab rat, leave it alone for the reasons I discussed. Let's go back to the hourly chart. In fact, sorry, let me just go back to the weekly chart. I'm going to draw on the weekly reversal level. And I'm just going to put it in there on the chart so we know where it is. And I'm going to make that a red line. So when we go back to the hourly chart, that'll be on there, and we won't have to switch back to the weekly chart. So if I reset this, you can see right down there, 36.50 odd is the weekly reversal level. So whilst we're above 36.50, it's about 300 pips below us, we'll be looking to buy the euro into dips when we get a G7 entry signal, and that'll be around about the moving averages and the Bollinger Bands and so on and so on. So now that back on the hourly chart, let's draw some lines in there and have a look at where these levels might be. So I'm just going to compress the chart, and the first thing I'm going to do is just to put some Fibonacci's and some black lines. And in fact, interestingly enough, that weekly reversal level is also the first place I can draw a Fibonacci retracement from. So I'm just going to draw one from that swing low, which is also the weekly reversal level, up to the top. I'm going to remove this black line because that top's already in place, and you can see there's the Fibonacci retracements, 38% at 1.3880 roughly, nice number, one of the 80s and the 20s. Then 38.30, that's the 50% retracement and a clear reversal level or clear support level. And then 37.80, which is also good because that's where the 200 period moving averages are and the lower 100 period Bollinger Band. So these are the areas that we'll be looking to buy the euro into. And what I'm going to do now is to draw some black lines on there, that one naturally, right there, on that recent low. And I can also draw one on that high over there. You can see that was a big sort of spike high on the on the daily chart rather, but a rally up to that level, and that's created a previous resistance level, which will now become support. Also happens to be the low of that spike. So if I just zoom in a little bit, you'll see that now I've got very clear levels from which to trade. I've got the Fibonacci levels over here, all the way down, 38.80, 38.30, 37.80. I've got two black lines, which are good previous resistance or support levels, and there are the two 200 period moving averages, plus the lower 100 period Bollinger Band, at around about 138 or so. So that would be a very key level if we plunged down to there during the early part of the week, and that would be a great place to look to buy the euro. For now, however, we need do nothing, and we can sit this out and wait for quite a long time until the euro begins to move much further downwards to some of these support levels. We need the stochastic to be oversold, and we need to be seeing some reversals at some of these levels. So for buying the euro, we're not going to be doing anything for quite a long time, probably, I don't know, at least 5 or 6 hours, maybe much longer. It might only be tomorrow. So those will be the opportunities to buy, and we won't be selling, particularly the lab rats, because we're going to stick with a trend direction going forward for a bunch of reasons: to make it easier, less tiring, fewer trades, less confusing, less risk of being stopped out against the trend when we have such a long, strong trend, although that's now likely to reverse. But nevertheless, there's a good variety of reasons why not to trade against the trend, and we'll stick with the trend direction going forward. So, you did, as I said, you did get an alert just 17 minutes ago to sell the euro at 39.70, but take that as you will, and it's not a trade recommended for lab rats. I almost said mad rats. All right, so that's the euro, and I'm now going to go across to the pound. It's pretty similar, really, in terms of the weekly direction and the trading strategy, although we may get a trade earlier on the pound than we do on the euro. All right, so this is the pound weekly chart, and if we zoom in a bit, you can see as well, last week's candle on the pound was bullish, and let's just highlight that. Let's get rid of that line. So we had a bullish candle last week, which means we'd be trading long this week, as long as we're above the weekly reversal level on the pound. The weekly reversal level is the low of last week's candle. So let's just draw that in. Again, I'll just put a red line at the bottom of there, so when we go across to the hourly chart, we'll be able to see it more clearly. So that's the weekly reversal level at about 57.50. We're at about 59.50 now, so that's about 200 pips beneath us. Notice how last week's candle poked up through the 1.6 level, which going back to the end of July or the beginning of August was also a resistance level which we've just poked through. As you can see there, we just spiked through 1.6 and didn't manage to close above it. And although it was a weekly resistance level and a double top going back all that time, this week or last week we did manage to break through it but not close above it. So that really could be a false penetration of that resistance level at 1.6, and it could signify again that the pound's likely to move down this week rather than move up. So even though we're going to be looking to buy the pound, it looks like there's a good chance it will move down. Nevertheless, we'll wait for the pound to move down to the G7 buying zones, and we should be quite safe. Let's go to the 60-minute chart, and just going to remove the view of the toolbar. And let's have a look at where the support levels are. You can see we're pretty close to the 200 moving averages and the lower Bollinger Band, and actually, as a matter of fact, we're quite close to being oversold on this hourly chart as well. The pound's been a little bit more sideways and quite messy actually compared to the euro. We've seen lots of up and downs, and in fact a lot of these we've managed to capitalize on in most of the time selling the pound against the overall weekly trend, and we've had a few, I think 3 100 pip winners over the last few weeks, which have been really good. But now we'll be looking to buy. So there's the weekly reversal level, that red line, and well, what can we put on this chart? It's such a messy chart that it's difficult to draw any clear levels in there. But what I'm going to do, interestingly, is just draw a trend line in here, which I don't often do. And you can see we've got quite a neat upward hourly trend line here on the pound, and perhaps that'll offer some support as well around about where these moving averages and Bollinger Bands are. So we'll keep an eye on this upward trend line, and well, let's see if we can draw a longer term Fibonacci in somewhere from the low on the chart here, somewhere from this low up to the high. I'm just going to put a fib in right from there up to that recent high. I'm actually going to remove this black line because that was just there for illustration purposes. And you can see right around here at the weekly reversal level, there's a pretty interesting level. It's the 38% retracement of this larger move up at 57.50 odd. It's also a previous bunch of support here going back over the last few weeks. You can see it's acted as support on numerous occasions, and it was also very close to being the resistance level at the middle of September. So around this 57 to 57.50 level is a really key support level, and we'll have to watch what happens closely there. Is there anything in between that? Yeah, well, there is a little bit, and we can put a shorter term Fibonacci in just from this low this low over here. And I'll just put a fib from there where it touches the trend line up to the high. And there you can see we've got a bunch of fibs, 5880, 5840, 5800, and but quite a messy chart. And so any of these levels that get touched may or may not produce good support. It's more likely that we'll sort of continue to be slightly more messy on the pound. Alternatively, we may just have a very strong plunge down and move straight down to these levels. But that's what's nice about the G7 system. We don't have to be too concerned about what we think might happen. In fact, we don't have to worry about that at all. All we want to know is that we'll be trading long this week, or buying the pound, as long as we're above this red line. And we'll only be buying the pound when we get a G7 entry signal, with all the things that need to go with it. Black line, Fibonacci, moving average, Bollinger Bands, and oversold stochastic. And once you get the entry trigger, that's the reversal, set up the reversal candle. That'll be the cue for us to buy the pound. So we don't have to be predictive or be concerned about what might happen or what should happen. All we do is we trade what does happen, and it makes life quite easy for us. So in summary, we'll be looking to buy the euro and buy the pound this week. We'll be looking for the euro to move down to those support levels. There is a short trade on the euro at the moment, not for the lab rats, but in general, there's a good short trade opportunity to sell the euro down to some of those support levels where we'll be looking to buy later on today or later on in the week. The pound, same sort of thing, rather more messy, but same strategy. There are the levels on the charts. You can draw those in or pencil those in onto your own chart. The larger Fibonacci analysis gives us, in fact, a 38% retracement right at this red line. Interestingly, it's also the 78.6% retracement. I didn't spot that until now. It's the 78.6% retracement of the move up from here. So where we see this red line, it's all a very key level. It's the weekly reversal level. It's the 78.6 of the shorter move. It's the 38% of the longer move. And it's also previous support and resistance on numerous occasions. So pretty important level, that weekly reversal level. And if it holds, we could see some strong rallies in the pound. So that's it for the week, and of course I'll send out alerts as usual by email and SMS, desktop alerts. And if you're a LabRat member, you don't have to worry too much about it for the first part of the week, probably most of today, and you can catch up on some much needed sleep. I'll see you in session on Tuesday. Take care. Have a great trading day.